So I wanted to address a concern that we're hearing a lot lately. A lot of people say, well, I'm going to wait till the prices go down. So I want to talk about that a little bit. So we know that interest rates are going to continue to rise. Until we get inflation under control, it is currently the only thing that our government is doing to combat inflation. So they will continue to raise interest rates. And the Fed has announced that. We just saw another hike last week, which brought the interest rates up pretty high. So I'm going to run a couple scenarios here and let you see the difference. So in the first scenario, we're paying $325,000 for the house at the current interest rate as of today of 6.75. Now, I did this on an FHA with 3.5% down, principal and interest payment only. And the reason why is because tax and insurance, those are variables that change. But on a 30-year fixed mortgage, your principal and interest is the same amount on every house based on the purchase price, the interest rate. This is not variable, right? So at $325,000 at a 6.75% interest rate with 3.5% down, your principal and interest payment only on a 30-year fixed loan would be $2,190. Now, some people say, well, I'm going to wait for these crazy market prices to come down. So let's say they did come down. Theory, it could happen. So let's say they went down and you could get that same house now for $300,000, $25,000 less. So our purchase price in this scenario is $25,000 less. But we know for a fact interest rates are going to go up. So let's say the interest rate went up to 8%. Given the rate hikes we've had this year, that is a very likelihood that it could be at 8% within the coming months. So our purchase prices went down $25,000 to $300,000, but our interest rate has went up to 8%. That payment on principal and interest alone would be $2,301 a month. So you can see between paying more for the property but less in interest, your house payment actually would have went up $111 a month. And this is something a lot of people don't realize. Your interest rate actually affects your monthly payment more than your purchase price. We only went up 1.25% here, but we went down $25,000. $25,000 doesn't affect your payment as much as that 1.25%. So just interesting food for thought, something to think about. If you're waiting on prices to drop, you are going to be faced with that higher interest rate. So it may make sense to go ahead and pull the trigger, even if you think the prices are going to drop, because those interest rates are going to keep your payment much lower. Thank you for tuning in. And if you have any questions, we're here at the Jessica Duncan team with Better Homes and Gardens Real Estate. We would love to help you and answer your questions and put you in touch with the right lender that can help run these scenarios for you in more detail.